Hello everybody, and welcome to another edition of Education from the Kane Financial Group. Hope everybody's doing well. Over the past year, investors have become increasingly worried about how inflation might impact their portfolios. Supply chain issues, government stimulus, increased consumer demand have contributed to higher prices for goods and services. Now, unfortunately, we add the war in the Ukraine to that. Now, most of you know my degree is in economics from Lehigh, and that definition of inflation is too many dollars chasing too few goods. So if you're out there, you understand there's a lot of people with some money, but the goods just are not there because of supply chain issues. Inflation can be a problem for investors because it decreases spending power over time. Basically, your money doesn't stretch as far. Luckily, there are steps that we can take to hedge against inflation and protect our portfolio. This is why all of our clients in their financial plans have an inflation hedge built in. So what are three strategies to consider to try and hedge against inflation? Well, staying investing in stocks. Tough to do when markets are going down based on the last couple of months, but inflation is a normal part of the market. During times of higher inflation, it's worth looking at the portfolio to make sure it meets your needs and your desired rates of returns and your risk tolerance. Stocks do offer the higher potential for returns and can outpace the rate of inflation, but obviously there's risk. And that's why we have buffer buckets, as we call, with cash or guarantees and annuities and things like that. Second is you could invest in real estate. Real estate is typically done well during inflationary periods. Inflation right now with real estate, what's going on? Prices of housing are going up tremendously. Landlords do have a tendency to pass on higher costs to tenants. I just talked to a client, and his daughter in San Francisco just had a rent raise by 30%. So you can either invest in real estate directly by becoming a landlord, which a lot of clients don't want to do, or you can invest in real estate investment trusts, which trade publicly on the stock market. Third thing is we could take a look at commodities. Price of commodities such as oil, as we all know, oil prices are up, and corn, they tend to rise with inflation, making commodities a very popular inflation hedge. You can invest in commodities through mutual funds or exchange-traded funds, and they hold a diversified basket of investments. We don't want to take the portfolio to extremes though, which means that our asset allocations for commodities are typically 5 to 10%. The other way to take advantage of commodities is to invest in businesses that are heavily invested in commodities. Mining companies, for example. But if you take a look at inflation today, all you need to do is take a look at oil prices. And oil prices driving up food prices. So as you know, when you go to the grocery store, the average family between oil prices, gasoline, and food paying $3,000 to $5,000 more a year. Been a significant tax increase and a significant burden on a lot of people. So the reality of it is inflation is real. We build it into all our clients' portfolios because we need to make sure that your income grows to hedge against inflation. Remember that your investment portfolio is constructed based on your long-term goals, your risk tolerance, and your time horizon. Avoid making rash investment decisions based on potential short-term changes in the economy. Investing is a long-term process. Be sure that any hedging strategies you use fit your overall plan and help you to stay on track to meet your financial objectives. Remember, our own emotion causes us as investors, unfortunately, to make poor financial decisions that can derail our financial retirement. Having a financial plan gives our clients a roadmap to long-term financial success. Hopefully you enjoyed the video. If you need some help, we at Kane Financial and our team are here to help you. Please give us a call. Take care, everybody.